Hello, good morning, good afternoon, good evening, whenever you are watching this video. Today, we will be talking about how quiet the media was about how the banks got loaned $50 billion October 31st, 2025 by the feds. They did a repo loan. Okay, so what they did was the banks needed money. So they started October 15th. I guess they got like 29.4 billion on the 15th of October. So basically what they did was they gave the feds some securities or equities that they have so that they could hold them, and then they will pay it back the next business day. But what I did, okay, so the Federal Reserve put $50 billion into the banking system overnight. Okay, the Feds sold 50 billion in reverse repo agreements the same day. So basically, they gave the banks that money, and then they took the money out the same day, back from them the same day with interest, from the banks the next day with interest. And so overnight, the repo transaction is when a third party buys purchase securities from the feds, and then the feds buy the securities back the next business day. Repo agreements can be made by private banks without the feds. So that stuck out to me because they put this program in place in 2021. So it seems like going back, banks been dipping into this program quite a bit, because when I would scroll down and see articles, I see the dates, and they've been going back like September 21st, 2022. And I'm just like, wow. So they've been dipping and, getting to these repo loans for a while now. And it seems, I guess it's to help them. It's because, the military checks and people's money wasn't coming in. So they needed some way to stay afloat. And people are thinking, like, oh my God, this is going to be another financial crisis like 2008, because banks are getting money. And the media kept this hush from us while we were going through the shutdown, because they didn't want people to panic. They didn't want people to take their money out the bank or anything. This is why they didn't tell us. That's why it remained hush. But uh, it's good to know. I think the American people should know that this was happening. But hell, what do I know? I'm just a talking head. Listen to the responses of these TikToks. Have a great day, YouTube.
I'm still traveling today, but I wanted to give you a quick update. I'm watching the Senate floor proceedings right now. They're voting on other bills today. It does not look like they have on the schedule today to vote again on the continuing resolution. And so yesterday, Chuck Schumer spoke, and it appears that he is waiting until after November 1st for any sort of movement on a continuing resolution or negotiations, because he wants the public to feel the pain of your premiums on November 1st going through the roof, and that is supposed to end the shutdown. But sadly, I don't think we have time for that. So again, I've been covering the repurchase market. It's the repo market. It's basically like the pawn shop for the banks. It's where they go to get emergency liquidity. And we were at $40 billion in borrowing as of yesterday. And today the banks just borrowed $10 billion more dollars. So in 2 weeks, from October 15th to today, October 29th, the banks have borrowed $50 billion in emergency liquidity. And most of what they used as collateral today was mortgage-backed securities, $8.2 billion. I'll make another video showing you the details. $8.2 billion in mortgage-backed securities, which is basically like pawning junk. You're pawning your couch or your TV at that point. You don't have any other valuable assets, and $2 billion of that was actual treasuries, and even that is not really considered a valuable asset anymore. So earlier this year, Moody's did downgrade U.S. treasuries. So the money has been leaving the United States. Investor funds have been leaving the United States for quite some time, and even U.S. treasuries are not seen with the same confidence that they once had, and that was back in May. So we are barreling towards an economic catastrophe come next week. I don't know how much longer this can continue to put stress on our banks, given that they just borrowed $50 billion today, and we're not even at the date when direct deposits were supposed to show for various workers in the federal government and military come the first of the month. So I don't know what our government is really doing any longer, but we are headed towards a catastrophe at this point. Desiree Townsend here from Capitol Hill. This is day 34 of the government shutdown, and the Senate is set to reconvene around 3 p.m. to vote. However, any vote is on a continuing resolution is not expected to pass until later this week after tomorrow's elections. And basically, the thought here on Capitol Hill is that later this week, the continuing resolution that is only good until November 21st will be voted on and approved, and that'll give time for the House to come back into session, put together a new continuing resolution that'll extend government operations until perhaps mid next year, and that will then be sent back to the Senate. However, as you guys have noticed my coverage of the financial markets and the repo market, you saw that on Friday the banks borrowed $50 billion in emergency liquidity, and that's just worsened again today. So today the banks borrowed, so far this morning, $15 billion. It's possible they will need to borrow more later today. I'll keep an eye on the market and let you know how that goes. So in total, the banks have borrowed close to $120 billion since the missed paychecks on October 15th. So when we look at the financial markets, when we look at the solvency and liquidity of our banks, we really have to look back at the Federal Reserve, and they are essentially largely to blame for this current liquidity issue and crisis. So yes, the government shutdown did occur, and it was part of the political games here in Capitol Hill. But regardless, the Federal Reserve should be able to incur that stress and to have enough of a buffer within the banks to not need to go and do emergency borrowing or have liquidity issues as we are experiencing right now. And so a lot of the blame of the liquidity issue right now does fall on the Federal Reserve, because unlike the last government shutdown, banks were required to have a 10% reserve requirement. So that was part one. Part two, starting in 2022, the Federal Reserve engaged in quantitative tightening operations, which was basically pulling liquidity out of the market up until just recently. So any sort of liquidity issue we're having right now is completely on the back of what the Federal Reserve did over the past few years. So we'll see what happens, but with billions and billions of dollars of missing paychecks and government funding not going into banks, we're in a really precarious spot right now. So hopefully we can wait until later this week for the government to pass some sort of continuing resolution to fund and bring liquidity back to our banks. But it's hard to say if that actually will happen this week, if a CR, even temporary, will pass. So I'll keep you guys posted. It's quiet around here right now. The Senate's not set to convene until 3 p.m. So as soon as I see some senators, I'll try to ask some questions, especially regarding the banks and the repo market, and let you know what they say on this entire topic.
The past week or so, banks have been tapping into this thing called the standing repo facility. Long story short, during the pandemic, the Federal Reserve created this thing to solve with liquidity issues so that banks could trade in their assets in exchange for cash from the Fed to meet their reserve requirements. And if you look at any usage charts, you'll see that for the last few years, this thing was almost never used. But the government's been shut down for a little over a month now. And mind you, $50 billion isn't the latest amount. They've still been going to the Fed for more and more amounts in cash. And I've been trying to find something objective for what this could signal. And I'm seeing two schools of thought. The first one saying that this is a bad omen. A bank could fail. We could have a liquidity crisis. And then you have some other people trying to say that it's not a big deal. This is normal. The standing repo facility is just doing its job. But they don't explain further than that. Their rebuttal is just an explanation of how the repo facility works and nothing more. Here's my take as of today. With the creation of this repo facility, the Fed gained the title of lender of last resort. Now, when you think of the term last resort, you think of something that you need out of sheer desperation. You're not necessarily going to have that as your first, second, not even 10th option. So with that being said, two things. The fact that the banks are in need of so much liquidity that they have to reach out to this last resort option, and the fact that these aren't even small amounts. I mean, $50 billion on Halloween, and still more amounts on a daily basis in the tens of billions of dollars. It's really hard to just say, oh, nothing to see here. But again, I'm continually doing research on this until I find something that solidifies whichever stance. I'll keep you guys posted. By the way, did you know that yesterday Fannie Mae removed the minimum credit score requirement from loans? I don't know, it kind of sounds similar to something that happened when we were kids, but I can't put my finger on it. I just don't know why.
Not many people are talking about the Federal Reserve and the repo that they just did, and we really need to. And here's why. Think of the U.S. financial system as like the plumbing in a big city. Money is the water flowing through those pipes. Banks are like the water towers that keep the pressure steady so everyone has what they need. In late October 2025, the pressure suddenly dropped. Banks didn't have enough water, cash, to keep things flowing. To prevent the system from stopping, the Federal Reserve quickly pumped $50 billion into the pipes overnight. The emergency boost kept the flow going, but it also told us something really important. The system's water tanks, cash flow, are getting low. This technically isn't free money or a bailout. It's actually like the Federal Reserve is opening up like a backup valve to stop the faucets from running dry. But if they have to do that too often, it means our pipes are wearing thin. What worries people is that when the pressure drops too far, like in 2008, leaks can turn into floods. In essence, the $50 billion was the Fed's way of keeping the system running. And it worked for now. But it's a sign that America's financial pipes might need major repair before the next storm hits. And as we know, it's raining every day now.
Donald Trump just found $50 billion to give to the banks, but somehow there's no money to feed hungry Americans. Let me explain what's really going on because this one is super sneaky. See, a few days ago, the Federal Reserve had to quietly step in and pump $29.5 billion into the banking system. Then on Halloween night, it happened again, only this time the number jumped to over $50 billion in a single night. That's over $79 billion. And that's the biggest emergency cash grab since the 2020 crash. So what's going on? They're using something called the repo market, which is short for repurchase agreements. Think of it kind of like a pawn shop for Wall Street. Banks take their safest assets, which are U.S. Treasury bonds, hand them over to the Fed as collateral, and borrow cash overnight. Then they buy those bonds back later. It's like a swap, right? And now that sounds routine, but here's the red flag. When repo borrowing spikes like this, it means the banks are running out of cash. They don't have enough deposits or reserves to operate normally, so they're pawning their safest assets just to stay liquid. It's the financial system's quiet panic button. And here's the insult. Well, Trump says we can't afford to fund SNAP, which costs about $9.5 billion for November. He just found 5 times that amount to keep the banks from collapsing. Now, that money could have kept 40 million Americans fed this month, but instead, it went to cover bad bets and shrinking deposits at the bank. This isn't a sign of strength. It's a sign the system is cracking, and the people who cause the problems are the only ones getting rescued. So yeah, Trump just found $50 billion for the banks while the rest of America starves. Don't forget that.
Another spooky story for you this Halloween. Today alone, the banks have had to borrow $50 billion in emergency liquidity, making it the largest amount they have had to borrow since the government shut down and people missed their first paychecks on October 15th. And if you don't know what that means, it's basically people don't have paychecks coming in to be able to, just go pay their bills. So they're having to go to the bank and withdraw the money out of their accounts and actually go pay those bills or buy those groceries, and the banks don't really have the money on hand because they lended it out elsewhere. And so the banks are having to borrow from the emergency liquidity market, which is backed by bonds and mortgage-backed securities. And since the government shut down and the first missed paycheck happened on October 15th, the banks have had to borrow a total of $106 billion. And you guys, that's not really good because sooner or later the banks aren't going to have your money to give back to you. And of course, tomorrow, 40 million people are set to lose their ability to buy groceries at all. And so all of this is going on simultaneously while people are worried about how they're going to pay their bills or buy groceries for their kids. And it looks like there's no end in sight because the government is still shut down. So seems to be getting more spooky by the day. Happy Halloween. God bless.
Fed quietly funds banks with cash again. You heard me correctly. To the tune of $125 billion in 5 days. Warning, warning, warning. This comes from the Economic Times, but it is also in other articles. I highly encourage you to do your research. Let me break it down for you. The Federal Reserves help manage the U.S. economy. It's where our tax dollars go. They just gave $125 billion cash to banks. And no, this is not normal. It's the biggest emergency cash move since COVID-19 crisis. On October 31st, the biggest day was $29.4 billion in one day. They did this using something called repos, which are short-term loans. Banks give the Fed government bonds and the Fed gives them cash for a day or two. Why the hell do banks need cash? Because they're running low on cash and need help to keep things running smoothly. Now, what does that mean for the economy? This is very important for you. It means the Fed is trying to calm things down behind the scenes. If banks don't have enough cash, it may cause panic or make it harder for people and businesses to borrow money. It may show the financial system may be under pressure, and I agree 1,000%. And that might not be obvious to the normal person. Now, how does this affect you, the banking customer? Well, if the Fed cuts rates, loans like mortgages, car loans, etc. would get cheap. Savings account will earn less interest. This extra cash helps banks stay stable. But it also raises questions. If banks need this much help, Is something wrong behind the scenes? The answer is yes, my friend. This article was from The Economist. Many economists have been telling us for a while that we are in trouble. And as somebody with a master's in business, I have been telling you for a while the economy is in trouble.